Hi, everyone. My name is Sarah Smith. I am a licensed life insurance agent here in California, and I'm going to teach you guys how to pass the life insurance exam. Now, of course, like I said, I'm here in California, so these questions that I have are um, some of them California specific, but not all of them. So anything that does not say California on it should pertain to everybody in every state. Now, of course, no matter what you're using, ExamFX, Excel, whatever, you're going to have a chapter specific to your state and your state laws. So definitely study. I know North Carolina, you guys are super different. So definitely make sure that you are reading up on your personal state's laws. Everything else should be general knowledge and it should help you guys pass the first time. Now, my story, my background, I took the insurance exam before I took my real estate exam, but after I started studying for my real estate exam because COVID pushed it back. So this test was extremely easy after studying for the real estate exam. I ended up getting a 94% on my test the first time I took it. So when my team was saying we need to see more licensing conversion, I said, let me go ahead and start teaching a class and just see if it helps people pass their exams. And it ended up having some pretty great success. So while I do not have the time in my day to actually go on Zoom and teach the class anymore, I figured I could just record videos, upload them to YouTube, and then anybody anywhere could have access and hopefully be able to pass their test the first time. And I hope that I can help somebody out there. Now, when I would teach that class, I would always say, when you're learning a foreign language, what do they make you do? Obviously, study your vocab. So I created a vocab Quizlet with all of the vocab words that I could find. I went through my old Excel account and I just, any single word that I could find, I put it into this Quizlet. So I'm going to link it in the description box below. I'm not sure if you guys will be able to access it. I think you will. If you can't, somebody just comment and I'll do what I can to fix that. But I definitely recommend starting by knowing your vocab. The minute you know your vocab well enough, you're going to look at these questions and be able to pick out a key phrase or key word, and you'll see that the questions basically will start answering themselves. And that is what I hope that I'm going to be able to help you guys realize with this series of videos. Now, I've got 200 questions here, so I'm going to do 25 questions per video. It should come out to 8 videos. And if you stick around to the end of the last video, I'm going to give you guys my test taking secret to help you guys alleviate your test taking anxiety. I did this little trick when I took my real estate exam and my life insurance exam, and I passed both the first time. So I gave it out at the end of every class, and people were like, it's like so simple. So hopefully that it can help you guys too. So without further ado, I'm going to share my screen and show you guys the questions. I will read the questions, but I'm not going to read through all of the answers for my auditory learners. That way you don't hear a bunch of stuff. You just say, this is the question, that's the answer, and you connect the two. Alrighty, guys. All right, so let's move me up here. Julie has a $100,000 30-year mortgage on her new home. What type of life insurance could she purchase that is designed to pay off the loan balance if she dies within that 30-year period? If you said decreasing term insurance, you are correct. Let's go into that. Decreasing term insurance is obviously going to decrease the amount of coverage that you have over time. Why is that useful if you're protecting a mortgage? Well, of course, let's say you have a 30-year mortgage and it's for $500,000. After 15 years of paying off that mortgage, you're going to owe roughly half, right, of what you started with. So roughly $250,000 after 15 years. So you can see over time, as you're paying down your mortgage and your balance gets lower, decreasing term insurance makes sense because the amount of coverage that you need over time will also decrease. 2, which of the following is considered to be a situation that has the potential for loss? If you said loss exposure, you would be correct. Now, if you are, let's talk about, let's say you're terrified of getting in a car accident. I've been in a couple since I've moved to California. Every single time I get into a car, I am exposing myself to loss, right? So if I want to eliminate that loss exposure, I will stop driving my car, stop riding in cars. Anytime, let's say you go to Hawaii and there's like a volcano and it's active, whatever, you understand loss exposure. Anytime you put yourself in a situation, you'll have that potential for loss. You're exposing yourself to that risk. 3, which Social Security status does a worker with 6 quarters of coverage during the last 13 quarter period have? Now this one is a memorization one. You're just gonna have to memorize it. Don't really know how to sit here and like work it out for you guys. This one's going to be currently insured. Now let's take a look at number 4, because number 3 and number 4 are just the inverse of each other. In order to be considered currently insured under Social Security, an individual must be credited with, and if you look at the question beforehand, you would know that the answer is 6 quarters of coverage during the last 13 quarter period. So I guess it's like 10 o'clock at night here. I just want to get this done for you. So this leads me to one of my tips and tricks. When you take the test, you should be taking it electronically. And when I took it, they allowed you to check a box that said, like, this one's a problem, I want to come back to it. So you can take the test the whole way through, check the ones that are kind of giving you an issue that you want to come back to. And if you see between 3 and 4, how they literally are just the inverse of each other, you might see 3 and not know, and then you get to 4 and say, oh my goodness, now I know. They're answering each other essentially. So as you go through the test, sometimes you'll find that a different answer is gonna, like an answer further down will, or a question further down will answer a question that you have earlier on that you didn't quite know how to answer. So be vigilant, be on the lookout for that. 5, an insurance company entitled to transact business in California is called what? Now, for those of you that are visual learners, I would always try to give little, like I said, tips and tricks. So this is what I would do when I would come across this question. What do you do if you are, you hold open a door for somebody when you're going into a place and you want to let them go first, right? You just say, oh, after you. So you are admitting them into the place. So an insurance company entitled to transact business in a different state, admitted, right? They are admitted. Okay. What is an insurance solicitor authorized to do? Not solicit insurance. Sorry, guys. This one's going to be help an agent or broker sell insurance. Which of the following is not considered a definition of risk? And this one's going to be the cause of a loss. Now, if you look at the word risk, obviously risk means the potential for danger, right? So the potential for loss, the exposure to danger, or uncertainty. All of these can be definitions of risk, right? But however, the cause of a loss is not a definition of risk because it has already happened. Now it's in the past. So it's no longer a potential for loss. We actually have a loss, and this is the cause. A life insurance policy where the insured can choose where the cash value can be invested is called what? This one's going to be variable. Now, again, you'll have keywords, key phrases as you're going through, and you'll have little light bulb moments. So the light bulb moment that I would teach here is your key phrase that you're looking at is choose where cash value can be invested. We know that variable is a security, right? So I have a life license. I do not have a securities license, so I cannot sell variable products. Variable meaning obviously it's going to go up and down with the market. You might win some, you might lose some. So if you are choosing where the cash value can be invested, your light bulb in your head goes off for variable. And I have a different key phrase, a different word for whole life, and a different key phrase and a different word for universal life that you will see in later videos as we get to those questions. I don't want to confuse you now. Which of the following is not a requirement of a contract? Now, taking my real estate licensing test, well, second, but studying for it first helped me with things like this because we had to know the legal requirements of a contract. So I'm going to go through those with you guys right now, and then we're going to get into the question. So let me share my whiteboard. So there's 4 requirements of a legal contract. I'm going to do the best I can drawing this for you, okay? So number 1 is legal purpose. You have to enter into a contract that is created for a legal reason, right? So a contract to kill is not a legal contract. I can't hire Tim to go and kill Jim, pay Tim, and then if Tim does not follow through in killing Jim, I can't go and sue Tim because he didn't fulfill our contract to kill, right? I can't go to a court and say, Judge, you know, Tim didn't kill Jim for me, but I had already paid him. He's going to be like, you're going to jail, right? Because that's not legal. It's not legal for me to hire a hitman. So you have to enter into a contract that has a legal purpose. You also have to have competent parties. Competent parties. Now, person to person, that just means that we're both of sound mind, right? So we don't have something like dementia. We're not under the influence of alcohol or drugs. There's no reason that any person would say, you know, you were temporarily insane or you don't have the capacity to enter into this contract. We have to be good, right? Now, when you're thinking about it from a life insurance standpoint, you have a person entering into a contract with a company. So the person must be of sound mind, but the company must be what we call solvent. I cannot, as a life insurance company, enter into a contract or write a life insurance policy for someone for $500,000 if I don't have the means to pay out that $500,000, right? Basically, I'd be defrauding that person. So the company itself has to be solvent. It has to have the money to be able to pay out that claim to that person. You have to have consideration, which basically just means something of value. Now, learning real estate and taking that exam, it's funny because most people would say, oh, will you buy a house for money, right? But love and affection is actually a legal piece of consideration that I could buy a house for. So let's say my mom wants to sell me her house. She could sell me her house for my love and affection. And to her, that could be just as important as my money. So consideration just means something of value is being exchanged. It does not have to be equal. And then the last one is offer and acceptance. Acceptance. So from a life insurance policy standpoint, I'm going to put in my application for coverage, right? So let's say me, Sarah, I want to apply for $500,000 of coverage, and my agent ran quotes for me, and she said, based on your age and your health, you can get $500,000 for $25 a month. So I put in that application, and the company comes back and says, actually, we went through your medical records, and we think that we're going to offer you that $500,000, but you have to pay $50 a month for it. So that's their offer to me. And then if I want to accept it, I would pay my premium and we would be entered into a legal contract because I accepted their offer. So any contract has to have these 4 requirements: legal purpose, competent parties, consideration, and offer and acceptance. So now that you guys know your 4 requirements of a legal contract, oh, what is the answer to this question? Which of the following is not a requirement of a contract? And you guys all know that the answer is B, equal consideration is required between the involved parties because while consideration is a requirement, it does not have to be equal. And think about that from a life insurance standpoint. If I'm paying a company $25 or $50 a month for $500,000, that's not equal, right? I could pay my $25 once on a Monday and my contract, my policy could go in force on that Monday, and then I could be killed on that Friday, and they would owe my family $500,000 when I only ever paid them 25. Does that make sense how it's not equal? A representation may be altered or withdrawn when? Now, this is where your vocab, it's like the first time that vocab is really important, right? That's where it comes to play. So a representation is any way that you are representing yourself to this company. So I'm Sarah, I'm 28. I was born this day, this year, this month. I have asthma. I don't have dementia. I don't have diabetes. I don't have, any X, Y, and Z, right? So anything that I am telling the company is true about myself is a representation that I am making to that company. Now, let's say I get something wrong. I forget that I have a condition that, might have been from 5 years ago, or let's say my agent gets something wrong, right? So I can go back and we can change that representation, but when? When does that have to happen? And I think this one's pretty obvious. It's C, only before the insurance is in effect. If the insurance has already gone into effect, you go back, you say, oh my goodness, this isn't right. You would have to cancel out that policy and get a new one. According to the California Insurance Code, what is the maximum penalty per violation for anyone who unwillfully commits an unfair method of competition? Of course, this is a California specific one, so if you're not California, feel free to fast forward. But if you are in California, this one is going to be $5,000. Now, there's only 2 that you have to remember. It's $5,000 and $10,000, and we will get to the $10,000 violation later in a different video. But this one, unwillfully commits an unfair method of competition, $5,000 penalty. Number 12, Tim was recently terminated from his employment and opted to change his existing group term life insurance into individual permanent life insurance. What is that process called? And it's going to be conversion, better known as the conversion privilege. Now I'm going to not go too deep into this, but I am going to give you a little explanation on why it is a privilege to be able to convert. Now, in a private insurance setting, a private insurance company, they're going to say you have to go through underwriting or you have to go through medical underwriting, right? So sometimes you have to do blood and urine and labs, and sometimes you don't. So if you have something like diabetes or cancer or a life-threatening illness, that company says, you're too big of a risk for us, we just can't offer you coverage. However, you are grandfathered into your employer's life insurance policy where you can get 50,000 or up to a year of your salary, and you're grandfathered in, and then you end up quitting or you lose your job and you decide to exercise your conversion privilege, you do not have to go through medical underwriting. So the privilege part is you've got your 30, 31 days to go ahead and convert. But you also don't have to worry about the fact that you might have this condition that a private company won't accept you for. So now you can get this individual coverage without having to medically underwrite, and you could have life insurance, whereas before you might not have been able to qualify. So that is a pretty good privilege, in my opinion. So sorry. Which of the following describes a contributory group insurance plan? Now, of course, the word contributory should probably set off your little radar. Contributory means that, yes, we, the employee, are going to be contributing, so it is B. Part of the premium is paid by the employee. Which of the following acts is not a federal offense committed by an insurance agent? This one's pretty easy, right? So we know that embezzlement, any type of fraud, and falsifying records would all be federal offenses. However, misrepresentation on an insurance application, sometimes we can't control that, right? Sometimes people forget or they're not completely honest with us. So misrepresenting something about your client on an insurance application is not a federal offense, but you do want to make sure that your applications that go into these companies are as accurate as possible, because you don't want anything delaying coverage or possibly keeping your client from being able to get coverage, even if it's not a federal offense. Dorian exercised a non-forfeiture option by using his life policy's cash value to purchase an extended term insurance option. When the term insurance expires, what happens? Now, this is a pretty good example of how they're going to attempt to confuse you. There's a lot of words here, but your key phrase is when the term insurance expires. That is the question that you guys are focusing on. We all know that when term insurance expires, your protection ends. Simple as that. California Insurance Code defines policy as a what? We know that it hits, policy hits those 4 contract requirements. So the answer is C, written contract. 17, which policy provision protects the policy owner from unintentional lapse of the contract? Grace period, free look period, incontestability, or settlement options. I wanted to go through the answers for this one because that's a really, really good example of knowing your vocab. So unintentional lapse of the contract, this is going to be your grace period, right? They're giving you the grace because you might not have paid, but you don't want your contract to lapse. So you've got a little bit of a grace period to go back and pay that. Which type of life insurance policy pays the face amount at the end of the specified period if the insured is still alive? Endowment policy. Basically, they're just like, congrats on our success. You made it to 100. Here's your money. Sharon is the policy owner of a $50,000 life insurance policy. Her son Mike is the beneficiary. If Sharon must obtain Mike's signature in order to change the beneficiary, what kind of beneficiary designation is this? Now we know if Sharon must obtain Mike's signature to change the beneficiary, it is an irrevocable beneficiary designation because she can't take it back without his permission. 20, an annuitant is guaranteed to not outlive their benefits with. Guaranteed to not outlive their benefits. guaranteed lifetime withdrawal benefit. Pretty simple, straightforward. Who does a life settlement broker represent? All right, now this is one of those that I do want to draw to kind of explain to you guys. So life settlement is one way of saying it, and viatical settlement is another. The words are pretty much interchangeable. So the answer is going to be D, an individual wanting to sell their life policy to a third party. So let's go a little bit deeper on this. Okay, so let's say you are 40 and you get a permanent life insurance policy for $500,000. Let's say, so permanent is going to stay with you for your life. Let's say you are now 75 and you get diagnosed with cancer and you need money for chemo treatments. You have this $500,000 life insurance policy, but there's no living benefits. It's only going to pay you out after your family out after you pass away, right? So it's not really any good to you right now while you need these cancer treatments. So what these life settlement or viatical settlement companies do is they come along and they say, you have a $500,000 life insurance policy, right? You need money right now. We are willing to purchase your life insurance contract. We want to be the beneficiary. We will give you, let's say, $350,000 right now while you're alive. But we're your beneficiary. So the minute you pass away, we get that $500,000. So you get the $350,000 that you need right now while you're alive to go and pay for chemo and, to get your affairs in order. And then as soon as you pass away, they get the balance. So 500,000 minus 350, that's going to be what, 150,000 that they make in profit, right? So that is how viatical settlement and life settlement companies work. So the answer to that question is an individual wanting to sell their policy to a third party, right? That's who a life settlement broker is going to represent, you wanting to sell your policy that you need the money for to that third party company. They're the broker in the middle. What area of group health insurance is regulated under the Employee Retirement Security Act of 1974, or ERISA? Now, I always would say this as a disclaimer. I don't think that this particular question will show up just on the life only exam. If you're taking life and health, you might get this one, but the answer either way is disclosure and reporting. That's just a memorization one. I don't really have a way to go and explain it. I never do it. Just say disclosure and reporting is your answer. Go and memorize it. A guaranteed issue insurance policy has no what? Medical underwriting. There's no need to medically underwrite you and make you go through labs if it's guaranteed issue, right? It would be too many steps, no reason. Which of these is considered to be a living benefit option in a life insurance policy? Living benefit option. Accelerated death benefit. Now, these accelerated death benefits or accelerated benefit riders, ABRs as we call them, are what drew me into this industry. I was in a pretty bad car accident and I wound up, like I said, I was in a lot of car accidents. I wound up in the hospital and it was $47,000 just for the one night. I had insurance, of course, but they only do so much. And they wouldn't cover it because they said my car insurance was responsible. So when I was told that living benefits were an option in life insurance policies, I definitely jumped on wanting to get my license to spread the word and tell more people about it. So if the company that you're working with does not have living benefits, you might want to take that under consideration. So living benefits will pay out for a terminal illness, critical illness, or chronic illness or critical injury if you need the money for something that falls into one of those categories and is covered by your policy while you're still alive. So technically it's called an accelerated death benefit because let's say you've got $1 million policy, but you need, chemotherapy treatment. For most companies, a certain portion of your $1 million death benefit will be available to you to cover something like a terminal illness, like needing chemo treatments, or in the event of a chronic illness, where it's obviously going to be ongoing, a portion of your death benefit will be payable while you're still alive every single month. That way you have a steady, flow of income coming in every single month to help you pay for medicines and medical treatments because of your chronic illness, and so on and so forth. What is the insurance term the state of California uses for an insurer that is eligible to transact business in this state? Now, this one is a repeat question. Sorry about that, guys. But if you remember from earlier, our little hand signal that we do, the answer to this one is A, admitted carrier, right? All right, that is number 25. So that concludes the first video. I'm probably not going to film the second one tonight because I'm getting a little bit tired. But yeah, be on the lookout for parts 2 through 8. And if you guys have any questions, feel free to leave a comment down below and I will get to as many of them as I possibly can. Thank you so much for watching, and I really, really hope that this helps you pass your test the first time like I did. It's an easy test, I will admit, but it's not a fun one, right? So have a great day, everybody, and we'll see you in part